Welcome to the show. It's Les Solgrove. This is Simply Des Moines Market Values weekly market update for Des Moines and Central Iowa real estate activity. It's Sunday, March 21st. Week 20 is in the books, and quite a week it's been. This is the title of this show this week is Turning Points. So let's see kind of what's happened this week. One thing that did happen that's outside of the turning point, we hit 4,000 closed sales here on May 15th. So earlier last week, we surpassed the 4,000 closed sale mark. And this graphic it's got a lot going on it, but it breaks down the 4,046 homes we hit on the May 15th, which pushed us over that 4,000 mark. The large majority of our listings closed were single-family existing homes, which is indicated here in the blue. But notice here this little sliver at the top. This is new construction condo townhomes. This category has increased dramatically over 2019. 2019, you can see we're literally neck and neck with where we were in 2019 on the same date, May 15th. Why that one says May 14th, I don't know. I know you're going to see it and wonder. It's one of my date calculations must have been off. But anyway, 4,047 in 2019, 4,046 in 2023. I would say that we're a little behind, obviously, in the single-family closed category. New constructions picked up a little bit of the activity, and I would say that the existing condo townhomes are pretty much neck and neck as well as 2019. We're definitely down from 2022 back to 2020, the COVID years. But this was kind of 2023 is kind of looking a lot like the way 2019 was looking. 2019 was kind of on its way to becoming a year where we were going to start to see our market peak and expecting the real estate cycle to kind of take its turn down to a slower market. And this is exactly what's happening in now this year that was interrupted in 2020 after COVID hit. So this graphic takes that same number, just the total closed sales, and it projects it back in time all the way to 2009. So you can see we were in a building pattern. We have usually a year or two up and then a year down, a couple of years up, a year down, and that pattern had increased pretty well through 2018. And like I say, we were seeing in 2019, we were seeing the market kind of shift into that slowdown period of the market, and then COVID hit. So all things considered, it tells me that, the market's going to stabilize on its own and we're going to do just fine on that. But this is just kind of an anomaly here. Although if you look at it over time, it does kind of look like things were going to continue to go up, but that's just the way our market is. It took us 26 days to go from 3,000 closed sales to 4,000 closed sales this year. And again, that's we did that in 22 days in 2019, since we were talking about that before. But it was really more similar to a couple of years ago when we were at 25 days to hit that 3,000 to 4,000 closed sale mark. Although in 2021 we hit that 4,000 closed sale mark much earlier in the year. So just some comparisons year over year, going all the way back to 2009. The market hot sheet, before we get into today's show, one thing you will notice down here in the bottom, just the sheer fact that we have such few listings out there in the new construction condo market, any fluctuation when you've only got 398 homes, new construction condos on the market, it can make that go from a seller's market to a balanced market to a buyer's market in a short period of time. If you were to look at the analytics, you'd see that it was literally a seller's market about 7 days ago. Then 4 days ago, it turned into a balanced market, and then went back into a buyer's market. So just kind of a crazy thing, but we're still deep into seller's markets here on existing homes and existing condos, and overall with that 1.8 months. So the turning point this week, it's kind of a week of first. So let's kind of talk a little bit about really what we're seeing that's different this week. This is the weekly home for sale graphic. And you notice that, the typical, the black line was 2020 and 2021 was the gray line. It's very typical for our market to inventory to kind of back up a little bit as spring buyers come out and they take the inventory before the sellers maybe are hitting the market. And so therefore our inventory tends to drop a little bit before it starts to rise. What we've seen this year is we kind of saw that same pattern, although with more inventory through about week 12. And then all of a sudden we saw a drop, a very minor drop, but we've seen 4 weeks here of inventory increases. And in fact, if you look right here, one thing that's optimistic, but yet maybe concerning, and I'll show you why in a second, we've seen week 20 has seen the largest week over week gains in homes for sale compared to the previous week year to date on the increase. Now we've seen this kind of similar difference in a downturn here near the first of the year, but for the increasing here from week 19 to week 20, we've seen a pretty substantial growth or jump between the previous week's inventory and this current week's. I don't know whether that had to do with weather factors. Mother's Day was last weekend, maybe, just who knows. But one reason why we're seeing this increase here is if we look at the 30-day sales pace, which is kind of the other side of the picture here, you notice that we saw a pretty substantial drop this past week. Meaning we didn't put as many homes under contract in a 30-day period. And if I go back a screen here, you can see that the split there, or that difference, is pretty close to the same difference here. So if we're not putting as many homes under contract in a 30-day period, rolling 30-day period, then of course we're going to start to see this inventory start to rise. And that's just kind of what we're seeing there. This is the 30-day sales pace graphic, and this one's just only a couple years old that I've been producing this one. Again, it kind of takes a look at how many homes go under contract within a 30-day rolling period, and it gives us a better idea of the activity of the market than maybe just showing you how many homes are in sale pending, which I'll show you in a second. But we were seeing up until 3 weeks ago, we were seeing increases. In fact, really only a couple of weeks here early in the year did we see any type of a decline. And I'm hoping that this is a short-lived decline. But if you look at the history, it looks as though our 30-day sales pace is probably at the stage where it's not going to be increasing nearly as much as it would have prior to the heat of the spring market. So this is kind of the buildup of the year. Again, if we start to see this change, you will see a couple of weeks like last year, likely that we'll see a couple of spikes. But overall, the trend is a downward slide, and it looks like maybe we are starting into that downward slide, which is, again, very typical of the year. But I would sure love to see this up at a higher pace there. So this is the actual number of homes that are in sale pending. Now, this is different from the 30-day sales pace in that this is a count of the homes, all of the homes that are under contract, and whether the home went under contract yesterday, a week ago, a month ago, or even 6 months to even maybe closer to a year if it's new construction in some specific cases. We might actually have some inventory out there that's been sale pending for much, much longer than the last 30 days. This is the total count of homes in sale pending, and that gray line there, that's that 2021 year where we hit our all-time record of 4,600. We are right at that pinnacle of where typically the market tends to slow down as we move to the fall. It's like a 1/3 activity in the spring up to the spring market, and then 2/3 of the year it slows way back down to what we see at the end of the year, which is usually the slowest period. So these are the number of homes under contract waiting to close. We will see this number probably just continue this downward turn as we move forward. So a couple of weeks ago, I started talking again about the inverted market, and here we are again. This little minor tick line here is the beginning of 2021, beginning of 22 and 2023, and you can see that there's the rise we've seen, and we're starting to see that kind of this little piece right here, starting to see that kind of falter just a little bit. April 17th is the date that we switched back over. You do see that with that increase in inventory and the slowdown in sale pendings, these two indicators are starting to cross. So it's very possible that we will be out of an inverted market for maybe a short period of time, or maybe if that increase continues with inventory because sale pace is down, then we might be out of an inverted market completely again. So this could be a very short-lived event, or I don't see it going on for 817 days like it did during the COVID period, but it very well could, this could just be a temporary thing where we're in the inverted market. So as far as the closed sale pace, as I mentioned at the top of the show, we hit 4,000 closed sales. This is just looking at the number of homes closed on a weekly basis. And we have still yet to surpass last year's weekly closed sale pace. So, it is entirely possible that we will continue this, but we are right here from last year. Again, we're kind of on track with 2021. There was a couple of, some spikes of sales in 2021, which I'm assuming were probably a lot of new construction that was closing from earlier in the year, or just that fast-paced market we were starting to see. But we're still behind considerably where we were last year overall and the year prior. The pricing side of things, median list price. So this is the price of homes currently on the market, the median list price of all homes. This takes into account new construction, single-family homes, the overall marketplace. As you can see, we've been literally flat for the past 4 weeks. $375,000 is the number, which is kind of good because it means that, pricing isn't going up, but it's also not coming down a little bit. It's being very stable. And this number looks a little bit different on the existing homes. I didn't show it this week, but it overall $375,000 is the median list price. So half the homes above are listed above $375,000. The other half of all of our homes for sale are under that $375,000. And so again, you can kind of see the trend from last year is at this point in time, it kind of slowly goes down as you get closer to the end of the year. Sometimes the new construction inventory starts to drop off, or maybe some sellers, start to jump into the market when it slows down a little bit, and maybe that's why we start to see some of this pricing change a little bit. So the median sale price side. So that was list price. This is median sale price. This is actually what is closing. We are seeing a fairly substantial jump here in the last couple of weeks. And again, the median sale price is considerably less than the median list price. So even though we have a lot of higher priced homes for sale, the price of homes that are actually selling and closing in this particular case is almost $100,000 lower on the median side. So over half the homes that are closing are above that 275 and half or below. The last 2 weeks, weeks 19 and 20, we have seen quite a jump there. Most likely, again, due to some new construction sales closing. That's pretty typical. That's usually why we see these spikes like that. The new construction takes a while to be built, and then when it comes on and sells, you have several sales that will make that number jump up. We typically will see our peak as the year goes on, although 2022 we saw that at about week 23, so we've got about 3 more weeks before we'll start to maybe see the peak from last year. 2021 was just an anomaly year. Again, that was just a strange year altogether. We saw the prices, closed sale prices, rise all throughout the year, and then 2022 was our year of our highest pricing. So we're doing pretty well maintaining that higher sale price, although with the slowdown in the marketplace, we're probably going to see an increase in price reductions as we move forward as well. So that's kind of the show this week. I appreciate you all for joining me every week on the show. Next week we will be back on Sunday. It's just a couple of days prior to the end of the month, so this will not be the end of month report next week. We will do that the following week. So join me again next Sunday, and in the meantime, get out there, homeowners, list your homes. We need the listings. We have a listing challenge for you. Bring them on the market, and we will sell them. And with the slowdown in the pace of buyers right now, maybe we'll give you the opportunity to find that home yourself. So let's keep this market running, and appreciate your support, and we'll see you all again next week. Talk to you later.